Uh, this is a continuation of money management. We talked about money management in one or two videos earlier. So people confuse profit management with risk management. Under money management, you should be focusing on two things: risk involved in your money and the profit that is involved. But when you talk about money management, that means you are saying risk, like the normal term, reward. Everybody know this, that there is a risk and there is a reward for your risk. So you can, that's why we always say stop loss is the risk, while take profit is the reward. But most often people focus on the reward than the risk. That is why I'm saying here that we should learn to focus more on risk management. When you can manage your risk, it definitely tells that you are going to last long in this market, you are going to be doing well in this market, because it's better for you to know how much you are risking per trade, per time, than for you to focus on how much you are going to be making. When you work on this will automatically prove itself why. Does it make sense now? So let's take an example for clearer understanding of what I'm trying to say. Now we have, for example, you are using a ratio, let's say stop loss against the profit. Now that's the risk and reward. You are now saying ratio 1 to 2, for example. Meaning whatever you are losing or whatever you are willing to risk, you want twice that back. I'm risking $1, I want $2 back. That's the meaning. But in this risk reward ratio terms, this is equivalent to 30 pips. This is pips. So when you say 1 to 2, it means this is 60 pips. Now, for example, you are using 0.01 on a $100 account, for example. It means if you take a trade, let's say e.g. Euro USD, you decide to buy, for example, I buy euro against dollar, and then you trade, you say you will take 30 pips stop loss, and then you'll be taking 60 pips take profit. So it means 0.01 from our equity table, which you all know about from the class. 0.01 means, or is equivalent to 10 cents per pip. Now it also means that if you lose that what's it called, 30 pips here in this trade, let's say you place this trade and you lost that trade, it means you have lost 10 cents per pip multiplied by 300 pips. So this will be equivalent to 300 cents. Divide this by 100 cents so that you can take it to dollars. This will definitely mean $3. That you are losing $3 of your $100, and I think that should be clear enough. Now, if you enter 3 trades at 0.01, what 0.01 stands for on your $100 is that you are risking just 1%. You said 0.01 of 100. In a normal layman mathematics, this means 1 over 100 multiplied by 100. So it means you are actually exposing $1 per trade. You are using, if you lose, just say you just place a trade per, you are using $1 per pip. No, I don't want to be wrong about that information. You know, $1 from your $100. Now you enter 30 lots, and we said this is 10 cents. So it's very clear that when you lose 30 pips, you are going to be losing just $3. Let me not confuse you with that information. Everybody knows this already. So it's very clear that when you are using 0.01 to trade on any account or on $100, 0.01, and you are taking 30 pips, this means you are losing just $3 per trade. So for example, if you enter 5 trades, you are losing just $15 as it were. Now this is better. If you lose 2 trades you've lost just $6. But remember, you are using ratio 1 to 2. Ratio 1 to 2 means you are going to be winning, you are going to be making 60 pips whenever the trade goes in your favor or your direction. And then you cannot lose all trades. So let's say you place 5 trades, you lost 2, you win 1. The 2 you lost is $6 using 0.01. By the time you win just 1 trade, this is 2 trade loss. You've lost 2 trades here, 2 trade loss. But now you won just one trade. You have gained $6, and that's good. This is a good risk reward ratio or risk reward management, because you lost 2 trades, you won only 1. By the time you win 2 trades, you already have profit, and that is why it's better. But sometimes people don't want to do ratio 1 to 2 because they feel it might not get there. No, that's when you don't know how to trade. So I decided to bring these irregular ratios. This is ratio 1 to 1, 30 pips to 30 pips. Ratio 1 to 2, say is saying 30 to 60. Now I'm saying you can do this 30. When you reach 30, you could be aiming just 50 pips or 70 pips or 90 pips. And if you want to do a bit more risk, you want to go a bit higher in your risk, you can say 40. It's not until you risk 100 pips before you can say you are trading. But though, if you are going to be swinging a trade, maybe you want to leave this trade for a week or a month, for a year, fine, you can risk as high as this, because this will also give you maybe like 350 pips more, and this is still a good risk reward. If you risk 100 pips in order to make 350 pips plus, 350 pips and more, then this is awesome. You understand? But normal intraday traders like you, that is always wanting to make money within or during the day, don't need to explore more than 40 pips at a go. Then focus on 50 pips in return, which is your TP. This is your SL, this is your TP. Or you focus on 70. When you lose 40 pips, you should know 70 pips is coming back. So if you lose 2 times, once you make once, you have gotten like 90% back. Or you are using 40 pips risk reward, and then you are focusing on 90 pips. If you lose this twice, that's 80 pips. Then if you win once, you already have your money back. I think all these are self-explanatory, so I'm going to take them off right now. I can have more space for explanation. Now let's talk about break even. I said here, you need to stop focusing on profit management or profiting. Most people only want to, if they want to enter a trade now, for example, the focus is, I have $100, how can I make it $200? They won't talk about, what if this trade goes against me? What will happen to my $200? Will it reduce to 0? Will it reduce to 10? They don't bother about that. They bother more of multiplying or doubling or tripling their money. That's why I said, don't focus on profiting, focus more on your risk. And then managing your equity, which is your risk, your money. You need to learn these few things. You learn to break even in your trade, learn to trail profit in your trade, learn to stop profit as well. People are used to stop loss. You need to start telling yourself there is something called stop profit. You need to learn to trail stop a trade, especially those using laptop. That's why I say using your laptop. Then the last one, you need to, for those that don't know how to use they don't know how to use the equity table we give to them, you can easily learn how to get accurate lot size or lots that you need for each of the investment or equity or money that you have invested in the trade or you have exposed to the trade. So you can use the position size calculator by my FS book on Google. Just go to Google, then you search for position size calculator. Then everything you want to learn about that is already self-explanatory on Google. Though we have a video on that, you can search for that on our YouTube channel as well. So let's start with break even. If I want to break even in this trade now, I will need to clean this, but maybe I will clean the upper part. So even the first one, how to break even. I took an example on Euro USD. For example, you say buy. You are buying into Euro, the European economy, which is Euro USD. Now, you need to consider your entry price, which is normally what we refer to as the current market price, as at that time that you entered that trade. Now, let's say you entered the buy at 1.2000. You need to add these two if the spread for your broker is 2. Some broker is 1 on Euro USD, some is 2, and some it might be 3. So that's why I put these two around here, so that we know that anything you are doing, you need to take cognizance of your spread. People always neglect spread as if it's not part of the business. It's part of the business. If you go and swim somewhere and it's not your house, you will pay for swimming. If you go and play table tennis somewhere and it's not your table tennis, you will pay before you touch their bat. Even snooker board and every other things about merchandise or transactions like that. So here, when you place a trade on any broker's platform, there's a little attached spread or commission, which must be added in our calculation as well. So I said for you to break even, you need to consider your entry price, what your reward is, and what your risk is. Now we are risking, this is ratio 1 to 2 from this. No, not ratio 1 to 2. We are risking 30 pips in order to win or to make back 50 pips. It's as simple as that. That's why I just hint that there. Not that you really need it, but I want you to know why this distance. This is 30, this is 50 plus the spread, making 52. If I win this trade, everything will be 52 pips total, but the broker will have taken their own 2 pips and my own 50 pips will be mine. If I lose this trade, everything I would have lost will be 32 pips altogether, because I lost 30 pips that I'm willing to risk, and then the broker will still take their own 2 pips which they've added. So if I didn't consider this, then I will be having maybe some shortages here. Instead of me to have $50 complete, I will have maybe 48 or some 48 pips, as the case where if they will remove their own pips for the spread that they are charging me. So now to break even in this trade right now, the moment this buy kicks off, I placed a buy right here on this price, and I was so accurate or on point, and the market started obeying what I've analyzed, and the trade started going on in my favor. The next thing I noticed, I got 20 or let's say 30 pips. Let's use 20 pips in that direction, and that will be what? 1.2022. The spread will always move with it. But for me not to confuse you, let me say my 20 pips. I got what? 20 pips in that direction. This will be 12020 from this entry price. Focus here. So now this is the new price that I will be seeing on my chart. Now I want to break even because I don't want a situation I've gotten 20 pips. Now let's consider a particular lot size. If I was using 0.1 lot size, 0.1 lot size, this signifies or equivalent to $1 per pip. It means I want to be making $1 on every pip. So for me to have secured 20 pips, for me to have gained 20 pips, this trade I'm still anticipating that is going to this my TP price. So but I don't want to lose in negative again. This is the negative area, this is the positive area. I don't want this trade to go against me again and then go and hit my stop loss. So what I can do are these various things that I listed here. I can break even, I can trade profit, I can trade stop, and some other things that you can do so that you will not really lose this trade again. Once money goes into profit, you should tell yourself you should never go back to negative, especially when it has gotten to 10 to 20 pips. You have 10 to 20 pips in your favor, you still now allow it in your very heart, you allow it to go back to negativity. I don't think you are a trader. I don't think you know what you are doing in the market, because why should you let it go back and then it's not giving you loss when it's already in profit? So to break even, how do you do that? Very simple, no stories, because this here, let me analyze this. This is stop loss line, this is take profit line. You notice that for Android users, for iPhone users it will be written buy stop, stop loss, take profit. It will be written boldly. But for Android users, you only see this line, the green line, and then the or some people's one is blue line, and then the red line is for stop loss. So this stop loss, which is 1.1970, will be written here. Why this take profit 1.2050 will be written here naturally. Don't worry, the spread, everything is inclusive. Now this is what you will see. This is ongoing trade. Now this profit is acquired, and you have 2020 now as the new price. If you want to break even on this trade, all you need to do is just go to your trade, which is the ongoing trade. You long press or press and hold on your phone. It will show a box, and then you click on modify. When you click modify, you will see these two things, or these two lines: the stop loss, which is your risk, then the take profit, which is your reward. You see it on that page. Then all you need to do is just what? Backspace this one. You delete it off. You now type the new assumed loss that you want to input. You just type that new price 2020, which is this one. The moment you have typed, sorry, that's an error. You type your entry. This is your entry price. This is your stop loss. This is your take profit. So you want to break even in this ongoing trade, you need to type this entry price here. So your stop loss will become your entry price, to be your entry price. They won't label it like this. I'm just writing it that the entry price is what you will now type here. Once you type this here, you automatically are breaking even. Because what that means is that if this trade, this 20 that you have, decide to be coming against you, when it gets here, the stop loss line will cut it off, which is your entry price. It will cut you off on that trade. It won't allow you to go into negativity in this area again. At that point, you are broken even. So thank you. Let me, I will clean this and then explain how we learn to what? Trade profit. How do we trade profit? So let's talk about how to stop profit. How do you stop profit when your trade is already in profit? So without closing the trade, that's what I mean by stop profit. Not that closing the trade. You can stop profit means you want to take some little profit in your favor, and then the trade still goes on and on and on like that. But when you want to do stop profit, you need to consider a minimum of 10 to 20 pips distance between the new market, the current market price, and then the stop profit price. For example, this price moved from 1.200 to 1.2020. Now from 1.2020, don't forget it is going to this place. Before you knew it, it moved to 1.2040. Hope you understand. This is what? 40 plus 200 entry price. So you have from 1.2000 to 1.2040. Now at this level you can stop profit. What will you do? You take note of the old distance. The old movement is 40. That is plus 40. That is in your favor. You now remove 20 from it. 20. So this will be 20 pips distance. You will leave a distance of 20 between you or the stop profit price and the new current market price. That is how to stop profit. So every time you have 20 pips, you shift your stop loss 20 pips in profit, 20 pips in profit, 20 pips in profit until you get to the take profit that you are admiring. So for example, initially I drew a line here earlier, which is the stop loss line, the take profit. Now this was your initial, you are broke even, but the market did not come towards your break even line. You thought maybe if it's coming down, it should come and eat you up, cut you off here. But it didn't come toward that. The moment it got to a particular price, it started going back up again. Now before you know it, it got to this price. So this 20 now, you add it to this, and your new stop loss will be 2020. Initially, don't forget, when you break even, it was 1.2000. Now it's 1.2020. That is, you've secured 20 pips. Your advantage. The remaining 20 pips out of the 40 pips that you have accumulated is still what the market is fluctuating within. And before you know it, it will get to your take profit. But if it does not get to your take profit, it decides to come and start coming down against you, it will cut you off around here, which is at 2020. At that level, you've made 20 pips in that direction instead of what? Instead of 50. this is still very, very okay, because some people will say, why did I close it at 40? It does not matter. It's just a principle of trading. It's just a principle of what? Stop profiting. Because you might think it will come and cut you off here. It might end up going towards what? Your take profit, your actual take profit, which is 1.2050. And because you have secured this, you will have opportunity to make this. What we're actually teaching you here is that every time you trade, you should have opportunity to make something little. And don't forget what we teach you in Pips Hacking. We said extra. So it's not as if this is your livelihood. This is the way you make money. There's no other way of another source of income for you. You have your salary, you have other ways of making money. But this extra 20 pips will go a long way per trade. So imagine you capture 20 pips and you did 10, you did 7 trade and you won 5 like that. So this is already 100 pips. If you lost 2, it will only be at 30 pips, and that's just 60 pips. But with break even that we taught you earlier, you might not even lose any trade again, and you will always be in profit. So once you are in profit, don't allow it to go back to profit. If you have a phone, you can be doing what? You can be stop profiting. Stop means if this trade will come and cut you off here, it will cut you out of stop loss. But this stop loss will not be the one. It won't be a stop loss at that time, because stop loss means I'm losing. Stop my loss. But stop profiting. I'm winning. But I don't want to lose all my winning back to loss again. All I've won back to losses. So I'm putting a distance between I'm demarcating a little profit. I'm securing some profit in my favor in terms of what. So if you decide to come against me, I will stop the profit from losing totally. I will stop profit, entire profit. That is the meaning of stop profit. That is, you won't lose all your profit that you have accumulated because you want to what? You are thinking to come back, to get there, and instantly maybe there's a sentiment in the market and the market direction or trend has changed. You don't have idea about that. But the security is that you have stop profit under stop loss. Then you will have opportunity to make at least 20 pips. And if it grows higher, let's say you have more pips you want to take, this goes higher, you can shift it. 20 pips plus this will give you 40. It goes higher again. Let's say you are looking at opportunity of taking maybe more pips. You wanted to take maybe 90 pips. And you notice the market is getting to 80 pips in your favor. All you need to do what? Secure 60. If you take 60 plus this, we give you 20, 60. Secure 60. If the market decides to come and fluctuate towards that, it will cut you off at plus 60. But if it is not coming towards this place, before you know it, it will get you your take profit, and then you have all the profit in that. Now I will explain. I don't need to write the third one. The third one is this, which is learn how to trade profit. How do you trade profit? You can trade profit your trade by simply leaving your TP open. I know you might have received some signals either from us or from professional signal providers or some companies that analyzes and give you maybe a bit of tips on how to trade. Some companies will give you signals and they will say stop loss is so, but take profit open. When they take profit is open, or you open the take profit, it means you have done your analysis, whether based on 4 hours, based on daily or weekly analysis, and you know that this trade will go between maybe 100 and more to 1,000 pips. A lot of traders have done this before. So for you not to cut yourself short or to not take most benefit of this kind of opportunity, because sometimes you might have lost 3 trades and just one trade will come and pay all your bills back, all your losses, it will cater for it. And this is the kind of thing that will do that for you. All your losses, just a trade, leave it open. When you have stop profit, but when you want to trade it, it means you don't even want to stop profit at all. What you are just doing is what? Following. Just the way trading stop on laptop is, you leave this open. The moment your entry, let's say this is your entry price, 1.200, and you are leaving your stop, your take profit open. and you notice the first move was maybe 40 pips. You quickly what? Type into your stop loss area 1.2040. This you will use it till maybe 2-3 days later. That's the difference before between the stop and then the distance here, maybe 15, or you put 30. It's a ratio 1:2. Let's say you are saying you want to leave a distance of 30 or minimum of 15 between the new price that the market is fluctuating at and the number of pips you have gotten. So the moment you get to 80, you say, oh, let me secure 75. You get to 100, wow, let me secure 85. You keep doing this until the market is tired and finally started coming down against you, and at the end of the day you might have acquired maybe 400 pips in that trade profit, because what you are accumulating now is profit. So trade profit, trading profit, trading your profit. You are just following the profit. You are not even concerned with the stop loss. Again, your take profit, you didn't set it, so you just use the stop loss line to be trade profiting, at 15 to 30 pips until that trend is tired, and mostly is used on 4 hours daily or weekly analysis. That's about trade profit. Then to trail stop, that is when you have a laptop. Most people that have a phone cannot trail stop, and the only way they can do trailing stop is by doing trade profiting or using stop profit. That is the difference between laptop users and the phone users. But if you have a laptop, that on your ongoing trade, you right click, you will click on trailing stop to give you all the options in points. You select the entire 10 points. 10 points is equal to one pip. So by the time you say 50 points, it means what? 5 pips. So you select or type in under the customized area what you want to trail stop at. Maybe you want 10 pips difference or distance, or you want 20 pips distance, or you want 10 or 5 pips distance. So you start trail stopping on your laptop. That is easier to do on laptop than on phone. But for phone, you can trail profit using the stop loss, and then you can stop profit using the stop loss as well, as high or as long as you want to remain on that one trade. And at that level, one trade can give you so much money that you might not even need to enter another trade on another currency pair. Then I've talked earlier on about the position size calculator. You go to www.google. When you get to google.com, you type position size calculator. You type position size calculator, and then what you do is to put in your equity, the lot size, the risk you want to, how much you want to risk, the lot size you want to use. You click on calculate to give you the adequate lot size you should be using for your investment or for your equity. I think that's what I want to talk about today on this aspect of money management. I believe later we'll work more on money management, because I want people to do more managing their money, not just focusing on profit alone. When you manage your money, it's better for you not to trade when you have no sure trade going on than for you to trade all the time and you are wiping out your money. And like I always say, if you have questions or you want to learn more, you want to know more on how to draw trend line, on how to use wave patterns, a lot of topics that we cannot teach in 3 days, that we cannot even teach with these videos. You need to come to the office at 73 Allen Avenue to be part of us. That's the only way I think we can help you, and then use this opportunity to help Nigerians to be a better Nigerian. Because I can tell you, government will say there is no money, no work. Your family members, your job, they are only giving you what we call maintenance fee. And when they say maintenance fee, it is only they pay you that salary. In 2-3 days, you spend that money, you need the money again. So they only want to pay you to maintain yourself, not to actually have savings to buy a house or to build one for yourself. And meanwhile, in the future, you need to have something you can call your own shelter after working for a while. So please, you can subscribe. You can click on the subscribe button below to have more educational videos like this from us. And then you can send people to our office for trainings. We are opened Monday to Fridays, 11 to 5 p.m. The basic class is Monday to Wednesdays. Mentoring classes is Thursdays, 10 to 3 p.m. and then you can come for personal question and answer mentoring classes, which will be what use your question to take your question as a topic and teach only you. So thank you very much for watching this video. We'll see you another time to explain more educational stuff about Forex. Take care.